Good morning, traders. It's the 2nd of February. We're Signal Centre talking ball. I'm Joe, joined by Steve this morning. How you doing, Steve?
Yeah, pretty good, mate. Doesn't look like the trading view's working again this morning. Still got issues with that, but yeah, pretty good. Listen to what the Fed had to say. Well,
Yeah.
I'm just scratching my head a little bit, mate.
Yeah, plenty to get through today, and yeah, disappointing that we're not streaming again on TradingView, but we are on YouTube, so hopefully people are tuning in. And if you've got any markets that you're looking at or any opinions that you want on certain things, feel free to post them up, and we'll try and get this TradingView thing sorted as soon as possible. Let's get on because there's plenty to get through in terms of latest headlines and what happened overnight. And yeah, let's do that to start with, shall we? So latest headlines, let's bring those up first of all. We had the core Eurozone inflation unchanged for yesterday. The headline Eurozone CPI inflation rate declined to 8.5% from January, from 9.2% previously, and below the consensus forecast of 9%. The underlying rate, however, was unchanged at 5.2% and slightly above expectations at 5.1%. Didn't really have a massive effect on markets yesterday, as all eyes really were on the Federal Reserve later on in the session. We had some employment data out from the US as well. The ADP employment recorded an increase in private sector payrolls of 106,000 for January and well below the consensus forecast of 180,000, although the December increase was revised higher to 253,000 from an original reading of 235. We also had US ISM manufacturing data yesterday, and that remains in contraction phase. The US ISM manufacturing index declined to 47.4 for January from 48.4 the previous month and below the consensus forecast of 48. There was a sharper decline in new orders for the month, with production also edging higher. In isolation, generally that probably would have done something to the market, but again, it was just in a bit of a holding pattern waiting for what the Federal Reserve did. And when they came out, they increased rates to 4.75%, so raising the benchmark to by 0.25% as expected. And the vote was unanimous on that. According to the statement, inflation has eased somewhat but remains elevated. The committee also anticipates that further increase will be appropriate, although it will take into account the cumulative tightening and lags associated with monetary policy. In terms of the statement that Chair Powell came out with, he said the Fed has come a long way, but there was more work to do on inflation. In this context, it would be very premature to declare victory. He also stated that disinflationary process had started, but only in around 25% of core PCE. He expects disinflation pressures will expand, but it's not been seen yet with sticky inflation in services. He suggested that 2 more rate hikes are potentially needed, but reiterated the high degree of uncertainty and that the Fed is data dependent. The markets were not convinced overall. He continued to warn over the stickiness of inflation. His comments that disinflation process had started tended to dominate, and markets were more convinced that interest rates would be cut later this year, with peak rate expectations also lowered slightly. We saw the dollar index post losses to a 9-month low, with euro US dollar and also breaking above the 1.1000 level to a 9-month high. Equity markets were boosted on the back of all of this. It reacted favourably to Powell's comments, with net gains as yields declined, although the global reaction was quite muted. And today we've got even more data coming out. We've got the ECB and the Bank of England both announcing their latest policy decisions. Both are expected to increase rates by 50 basis points, taking the ECB to 3% and the Bank of England to 4%. And policy guidance will be a crucial element for the euro and sterling. So the press conferences will be really where the action happens. So let's get on to some charts, Steve. Do you want to kick us off with cryptocurrency today?
Yep, I sure will. Got my charts here. Here's cryptocurrency, and Bitcoin is looking pretty tasty at the moment. It's we pushed to a new the last time we were here was August, so a new multi-month high. Although the price action overnight has pulled back slightly, this is forming a little bit of a bearish candle. We've sort of pushed higher, got up to 24,258, and now we've retreated quite aggressively from that high, about 400 points lower. So that's forming a bit of a bearish candle. However, this we're getting the crossovers on the moving averages, which are really supporting this upward move. We're approaching the major resistance for me is between 25,000 and 25,400. We pick up those points from the previous swing lows that we got back in May last year. And once we broke through, we had an attempt to rally in August, which stalled in front of that level, got up to 25,200. So we could even narrow it down to 25,200 to 25,400. That would be the next major level 2 test. Support currently coming in 22,380. That's where we've sort of like held over the past couple of weeks, and as I say, yeah, we've hit a new high this morning, so looking pretty rosy, but the pullback has been quite aggressive, so be a little bit careful with that. Other markets that we sort of tend to keep an eye on is the XRP. That's having some decent crossover as well, although the 200-day moving average, also the 100-day moving average, has broken down below the 200-day moving average, so that's slightly negative. However, these moving average levels have provided a little bit of support. Also, we've got the 55 days. For me, that'll be probably the real sort of like marker over the short term. Let's see if we can get a decent sort of trend line up here. We got the sort of potential trend line all the way up here. And if we want to say where's a real trend line, which we can take, we need at least 3 points. So we got that point we say is broken through it, this point here, and multiple points here. So you can see we're really sort of like, if we can manage to break above this resistance level here, we call it 43.37 cents, then that really opens up the upside. As the last time we were here, we sort of like broke down quite aggressively. So I'd really sort of like look at this level as quite key today. So XRP, or over the next few days as well, XRP looking like it wants to sort of break higher as well. 41.31 trading at the moment. Moving on, let's take a look at gold. Gold had a decent day yesterday. We're pushing higher, pushing towards that measured move target. It's been a long time coming. This inverse head and shoulders formation we picked up quite a while ago now. We're looking at probably this sort of early deck we sort of like first highlighted it, and that had the potential to move higher. The measured move target 1966, as we keep saying, that's the last time England were a happy football team. And above that, then we have other resistances around $2,000, obviously, and the all-time high 2,070 to 75. 70 was in March 22, and we got to 2,075 in August 20. So there, I mean, gold just marching onwards and upwards with this dollar weakness after the Fed last night. That's breaking down. Fed dollar index trading at 101. This is the lowest levels we've seen really since April last year. So looking really like that dollar rally is over. I mean, I know we sort of like keep saying that it feels like it needs to have that sort of rebound, but like natural gas yesterday, I felt like that, and it broke lower even more aggressively. So we've got to sort of like just go with the flow on this. Now we've got decent resistance now in the dollar index, 101.50 all the way up to 102.60. So for me, that's there's more upside on these dollar-based assets. Silver, inverse head and shoulders as well, the same. We've got the crossovers on this. We've got the golden cross, which was the 55-day moving in through the 200-day. We've got the resistance level up above at 24.55. Measured move target again is just higher than that, just below the $25 mark. And then we will run into further resistance, but not until like $26 to $27. So the last 3-4 days of price action that have been pretty positive after this 55-day moving average provided decent support. Call a copper someone because copper's not doing the same, but it is holding at support, $4.10, all the way down really to 3.96, which was quite a key resistance level for a long while until we broke up through that on the 9th of Jan. We've pushed up higher. We've managed to get up to 4.35 and a nice little pullback here. Maybe another opportunity to buy. That's what it feels like with these markets. We've had that little dip in the last few days on the metals, and that really shows that it may be an opportunity to buy rather than a market topping out. Crude oil yesterday had a bearish day, bearish outside candle formed on that. Obviously, we had oil inventories in the afternoon, and that led to the market breaking lowest we've been since the 11th of Jan. And it feels like oil again has attempted to sort of push higher, but it really hasn't got the follow through or the momentum on the upside. So that looks like further downside as it is now expected. We've got quite a decent support level around about the $76 mark on WTI. On the Brent crude oil, that level is at 82.35, and we're just trading about 65 cents above that at the moment. Again, same sort of price action. Tried to break hard, tried to take out that December high, but failed and has turned back lower. And as I say, if we manage to get below that interim support here, then we'll be targeting the swing low at 77.75 and the 75.35 level. Natural gas, I tried to fade this yesterday and got smacked properly. Got stopped out on it. We'll show it on gun to head trade idea, and it has continued lower. And there's no real sign of this slowing down. Looks like the measured move target of this head and shoulders formation at 135.50 is on the cards. We're trading at 250. We're only $1.15 away. It's not very far. And you know, we've had this like 70% odd sell-off in since 23rd of November. It's been quite an aggressive move. We had that little pullback in December, but wow, it's left a lot of gaps in the chart. At some point we may fill them, but at the moment it's see you tomorrow, baby. Maybe Joe can give us a bit of direction on the dollar, a little bit more of a direct one.
I can try, that's for sure. So yeah, let's take a look at the US dollar. So as you said in the market commentary, we were making new lows on the US dollar. The reached a 9-month low actually against the euro. So let's take a look at the daily first of all. So we've got this big head and shoulders top pattern, which we've been going on about for ages. So this really sort of dictates the overall bias and suggests that lower prices will be seen. The measurement from the head down to the neckline projected lower suggests that eventually prices will reach 95.90. And yeah, we're on course to do that. So if we look at price action yesterday, we can see that in recent days prices had stalled. We'd see some large ranges that were being spotted on the daily charts, some big wicks on these candles, and finding support around 101.52, and below that we had support at 101.30, which is this previous low from back here in May. But yesterday it was all changed. So big move to the downside following the Federal Reserve speeches and interest rate decision yesterday. Closed at a new low, so that is pretty negative. And if we look at price action overnight, we can see that we've actually gapped lower today. So that's further highlighting weakness here and suggests that we are going to continue to see lower prices. Now, we do have an unfilled gap at yesterday's close, which is at 101.17. So potentially we'll get maybe a retest of that to fill that gap, but ultimately the expectation is that prices will now continue to move lower. Now, we do have the ECB out today, so that obviously could have an impact on things, but ultimately it looks like the dollar index is likely to continue moving lower. The next level on our charts is this 61.8% fib level, which is at 99.17. One thing I would suggest that maybe might provide some support is that psychological 100 level, which comes in around about there on the charts, which is kind of midway between the resistance that we've now formed and that next level of support down at 99.17, which is the 61.8% fib. So yeah, it still looks very bearish here. Looks as though it's a case of selling into rallies for the time being. Now, looking at euro US dollar, that broke through that 50% Fibonacci retracement level that we've been watching for some time now. That was at 109.42. Really powerful breakthrough that yesterday, and prices have continued higher today. I'm expecting things to maybe slow down a bit, maybe go a bit sideways between now and around 1 o'clock later today when we have the ECB policy decision, and then following that up with the press conference. So all in all, this is looking pretty strong as things stand. We can see prices have been moving higher within this short-term upward trend. Any pullback could be limited maybe to around 108.77, which is really lining up with the trend line that we've got in place now. and then we can maybe start looking for, again, higher prices towards that 61.8% fib level, which comes in at 112.74. So looking pretty strong there. Let's look at cable. That's really struggling at the minute, despite the weakness that we've seen in the US dollar. This is stalling at a major level of resistance, highlighted here by this blue line. That's at 124.30. Now we can see prices rallied into this level back in December and then failed, and we're now getting multiple attempts at trying to break through this level yet again. If we look at price action going back really to the 18th of January, it's been really contained within this very tight range. The lower end of the range coming in at around 122.70, upper end coming in at 124.30. We do have an uptrend line in place, so any pullbacks have been previously limited to the lower end of that. So maybe if we get any pullback to around 123.00 today, then that could represent an opportunity to buy if you're expecting a breakout to the upside. If we can clear this level at 24.30, then again, we've got the 61.8% level in sight, which is at 127.57. So all in all, looking pretty bullish, but there is some pretty significant resistance above, so do be careful. And of course, we've got the Bank of England policy decision today at 12 o'clock, followed by the press conference at 12:30. So this is likely to be very volatile. Let's take a look at some of the other majors. We can look at Aussie versus the US dollar. As we know, weakness in the US dollar, which has led to this breaking through resistance. We haven't closed above it. So yesterday's price action, we actually closed in line with this resistance level from the highs that we posted in August last year. We are trying to move above it at the moment. So unless we can get a close above it, then I'm not ready to go full ball on this just yet. I would like to see a close, because what can often happen is you'll get these moves above to test previous or test resistance levels, and then you get prices closed back below, and that creates a kind of swing failure effect, which may then lead to a pullback in prices. So looking for a close above 0.7136 before I can get too excited about a continuation higher towards that 78.6% level. Let's take a look at dollar yen. So the weakness in US dollar, as you would expect, has pushed this a bit lower yesterday. We have broken out of the channel, but we were concerned about this resistance level at 130.39, which has continued to repel prices. Yesterday we saw a decent move to the downside, maybe forming some sort of continuation pattern here, a kind of pennant or flag type pattern, you could say, on the daily chart, which is now broken to the downside and indicates that we will continue to see lower prices. The next target on this, firstly, is the swing lows from the 16th of Jan. Then we're looking to target this 126.36 level, which is these previous swing lows from back in May. Okay, requests for currencies. I'm going to take a look at Swiss franc versus the Japanese yen. So let's bring up the daily chart there to start with. So for me, it looks like we're forming a big top pattern here, but it's not going about it in any kind of fast fashion, to be totally honest. So we have seen a bounce from the support here at 137.80, and prices have rallied quite nicely from that level. I've got a resistance zone really between 142.66 to 143.53. So I think anywhere in this kind of region, I'd be actively stalking opportunities to sell on this. So somewhere around there. Fairly stiff resistance around those zones. So I think my bias still is for lower levels, given that on the daily chart, we've got a sequence of lower highs and lower lows. So I think the preference there is to sell into strength. Let's take a look at the daily and see if, the intraday, and see if anything's lining up there. So we can see resistance here at 142.45. We posted a long-legged doji candle into resistance there, and then prices move lower from that point. So I still think it's a case maybe of looking to sell into rallies towards sort of 142.13 to 142.45 and looking for a continuation lower. So that would be my take on Swiss franc versus the Japanese yen for the time being. Still seems to be some underlying strength in the Japanese yen. And potentially some weakness in the Swiss franc, as it's typically seen as a bit of a safer haven currency. And when markets are moving higher and there's good appetite for risk, then we may see prices continue to move lower. So from a risk reward perspective, selling into the upper end of this range that we've established, targeting a move lower, that could be quite a nice setup potentially. So you'd want to have your stop losses above that high and targeting maybe a move down to the lower end. You're looking at around about 4 to 1 as a risk reward ratio on that on an intraday basis. So that looks quite nice. Okay, let's take a look at sterling versus Aussie dollar. This is really interesting. I'm glad someone brought this up actually, because on the daily chart, it looks as though we've completed a nice looking head and shoulders top pattern. Let me just clear up some of these drawings. So I have been watching this myself. It's on my list of assets to consider going short with, but it looks like we formed a head and shoulders here on the daily chart. And we saw the breakdown through the neckline here at 174.59. We attempted to retest the neckline here. Looked as though we may be trying to get back above that neckline, but ultimately failed, closing on the lows of the session to post that reversal candle. And then yesterday we saw some really decent follow through to the downside. So that's looking pretty sick indeed. We've got support down here at 172.15. And then below that, potentially down at 170.95. In terms of the measured move target, so where this head and shoulders suggests that prices may go on the downside over the more medium term, we take a measurement from the head down to the neckline and project that lower, and that suggests that ultimately prices could go down to 166.80-ish. And if we bring up some fib levels, we can see that's kind of just below a 61.8% fib level from this entire move here, from the lows in September to these highs that we've posted in December. So all in all, looking pretty bearish, and I think that's a pretty good spot, and I'd be looking to sell into rallies there. You could also argue that we formed a bit of a bearish flag here on the breakdown, and that suggests a continuation lower in price. So yeah, lower prices for me on sterling versus Australian dollar. Okay, Steve, hand it over to you. You can go through some indices for us.
Yeah, did you cover sterling yen? Sorry, I missed that, Joe.
Sterling yen.
Yeah.
Is that on there as well? Did I miss that?
Yeah, that's a nice little request. Sterling. Sorry, Swiss yen. Did you
Yes,
cover
I
that?
just went through Swiss.
Yeah, sorry, yeah.
Swiss yen. Yeah.
Okay. Sorry, I was distracted. I've got a couple of little things I want to show people in the that I saw that I found yesterday. But let's take a look at indices now. Here we go. Indices, FTSE. Look at FTSE first. FTSE on the weekly chart, we've broken through this like resistance. We're trying to push towards this all-time high around 7,900. We've stalled in front of it and we've reacted lower. So but this week we've sort of like we have posted a higher low and around about the hourly cloud, and it's pushed higher nicely through the 4-hour cloud as well. So looks like we've retested resistance that we had at 77.30 and reacted nicely higher from there. Overnight, we've sort of like moved lower from 78.15. That was the sort of like most recent high, so 78.77 and the 7900 aren't far away. We're sort of looking to push through that resistance on the cloud this morning and maybe march on. Obviously, the Bank of England will sort of like have a big sway on this. On the DAX side of things, that is currently, as we're speaking, pushing to multi-month highs. We can see we haven't been to these levels since actually February last year. So we're basically nearly 12 months since we've been at these levels, and you can see what a move it has been. Overall, this major resistance at 14,800 has proved quite significant. Once we've broke through there, we've retested and moved higher. We're trading at 78.6 fib retracement of the entire down move of last year to the midpoint around October, and that the rally high has been quite aggressive, a nice sort of like impulsive move higher. Really looks like we're in the 5th and final leg. So yeah, it looks positive. Can't really sort of say anything more. I always say indices looks positive through gritted teeth, because I do find sometimes they seem to be supported unnaturally, shall we say. Anyway, the Dow US 30 downward trend line broke through it all the way back in November, retested in December, and it looks like it's marching higher. Although yesterday's candle was a bit indecisive, doji candle, or dodgy as we like to call it, with reference to TAF. 34,360 is the resistance level. We failed to get above there yesterday. Another attempt may be likely today. And the support coming in the shape of maybe the moving average, around the 55-day moving average, coming in at 33,650, all the way down to 33,525. The Nasdaq hasn't held back though. That has continued this move higher. So we had a doji candle yesterday in the Dow, and this really strong, aggressive, bullish candle in almost like a Marabuzo type candle, breaking through the resistance at 12,250 and marching aggressively higher, looking to target maybe this 38.2% fib retracement at 12,850, only 300 points away. That would match up with last September's swing high, and also it looks to be a measured move target of whatever we call this down here, maybe a double bottom. That's I suppose we lined it up with this these two lows here, or these three lows here, so maybe we could even call it a treble bottom. But yeah, that's measured move target for that is 12,940. So that doesn't look like it's slowing down anytime soon. S&P is with it on Nasdaq, so it's only the Dow that's really lagging slightly, although the Dow has sort of extended previously. We've got a nice crossover, the golden cross on the S&P. That has lent some positivity to it. Momentum is quite strong, and we're taking out resistance currently at 41.40. We had a swing high in September that was at 41.58, and then the major level of resistance that we're targeting will be after this will be 4,300. So that's what we're looking at the moment. The one market that I was actually looking through some. Let me see if I can bring it up. I was looking through some news sentiment and trying to sort of like get some idea. Let me just switch this alarm off 1 second. Looking at some news sentiment this morning, trying to get some real idea for the gun to head trade idea, and just went through indices, really looking for anything which is maybe showing the new sentiment is turning lower while prices are still moving higher. The one market I did find it on was the Nikkei. We got an indicator. These market alerts tell us that in daily news sentiment is moving lower, and in 70% of the last 10 occurrences, price has fallen within 9 days, and that's been posted yesterday. So it's obviously slightly longer term forecast than our gun to head trade idea, but I like this because it gives us another form of analysis. News sentiment is quite a key form of analysis, and sometimes this will give us an indicator before the price moves. So for me, I'm looking for little clues here to try and get our gun to head back on track. And you can see that the US 100, so this is the Nasdaq, is looking. We had a hold on, US 100 or Tech 100. It's I'm getting a bit of a confused thing here. Is that actually showing the Nasdaq? It is, isn't it? Oh, here I clicked it. I didn't click it before. So here we've had like a positive chevron on the chart here. So 2 days ago we had 6 days ago we had this 40% chance of moving higher. That was all the way back here, but this chevron doesn't seem to have appeared, so I'll have to have a look for that, where that's gone to. The US 30, that's the Dow, that's you can see price has moved higher and new sentiment is moving lower. So we have got to be a little bit careful at these heady heights. It wouldn't take much to flip this market on its head, because everyone's talking about the inflation rates. We've got 2 big rate meetings out today, and I was looking for as well for the, if the DAX 40 give us any sign, and funny enough, that's given us a bearish signal today on that. 60% daily news sentiment moving lower, and 60% of the last 10 occurrences price has fallen within 9 days. So, and you can see on this chevron here the market moving lower. So yeah, it's I'm always looking for the bearish side, Joe. You know me. So I'm struggling. Oh yeah, one thing I wanted to sort of show. I saw this from JP Morgan yesterday. This was posted on the JP Morgan website. It's quite a nice little graphic, looking for the outlook for major currency pairs. March 2023. They're looking at cable at 114. So that's trading. Was that trading 123 something?
Yeah.
Euro dollar back to 95, so below the parity, and dollar yen at 140. And you can just click on this little button at the bottom, and it tells you where they expect prices to be in the future.
Some chunky moves.
Yeah, they're looking
And it's
for, like,
suggesting the US dollar is going to come roaring back at some point.
it is, yeah, and it was sort of like the charts technicals showing us this morning. There's no sign of that yet. So yeah, has the US dollar peaked? So there's another, maybe a contrarian view here. The dollar already yields more than 50%, 56% of currencies globally, and the Fed isn't done hiking yet. So will the euro keep falling? What's the outlook for the British pound? So quite a nice little. I'll post that
Up in the comments
in the YouTube channel.
Yeah, lovely. All right, Steve, let's move this on to the gun to the head challenge then. So this is where Steve and I pick trade ideas live on the video in the hope that we can turn a profit between now and 9 o'clock tonight. Didn't have the best of days yesterday. We were both stopped out on our trade ideas. I was selling sterling CAD and Steve was buying natural gas, both of which were stopped out. So we started with a live account actually in January on this. We put £2,000 into a trading account, and at the moment we're actually down by £102 since we started. So not particularly great, but it's always the way, right, Steve? We've got a massive track record of 2 or 3 years of doing this and shown consistent performance, but we're in a period of drawdown at the moment. But we know when we look at these trade ideas, we're typically looking for some decent risk reward. So hopefully only take a couple of winners to get us back on track. Now, basically, we come up with these ideas as if we had a gun to our head. So what would we trade right now? These ideas will expire at 9 p.m. or when the stops or the targets are reached. So we've got to go again today, Steve. Got to dust ourselves down. You got anything ready to go?
No, I haven't. No.
Right. Okay. Well, I'm going to go back in for sterling CAD. So yesterday I was selling because we can see here there was a big level of support by this black line. We saw a rally into it and then a turn down. So that was kind of leading me into the thought that it was going to continue moving lower. But what looks like's happened over the last few hours is that we've formed some sort of corrective channel, potentially a bearish flag here, indicating that prices will again continue to move to the downside. So I'm actually going to sell it again at 164.25, and I want to put a stop loss above this high that was posted yesterday at 7 o'clock, just after the Fed announced rates. So Steve, if you wouldn't mind getting that on for me.
Right, sterling CAD. Here we go, mate. I'll get it on for you.
It's moving. It's moving.
Oh, well, I've got to log in first, haven't I?
Oh, come on. You're purposely slowing me down here. You don't want me to make money, do you?
Maybe I don't want you to lose money, Joe. I don't know what it is.
That's fair.
Let me, just based on the recent track record, that's all.
Yeah.
I'm with you on that as well. I'm not sort of like denying that I'm rubbish at the moment as well. So here we go. Let's create a new order. We want to sell. We want to do it at market. We want to put our take profit, stop loss. We want to risk 1%. So you're looking at selling at 164.80. Oh, 164.80, and target
is going to be 162.72.
2.48 to 1.
Yep.
2.56 to 1, actually. It just picked up a little bit.
Nice feel. Okay, yeah, so we're on there selling sterling CAD, and now Steve's got to pick a trade idea. Really under pressure here.
I am. I'm sort of looking at...
I doubt you'd be able to get that on in the size with a small account.
No, maybe not. Let me see. Let me see what it does. I'll be devastated if I can't get it on. Oh, hold on. 0.4 units. Yeah, I can. Yeah. I don't care if it's micro or not, mate.
Well, you haven't put your stop in yet.
I'm not proud. Oh yeah, I want to sell it, mate. So and why that's not right. Target. What do I want on target? That's a 2-to-1 risk reward. It's only risking. Why is it only risking 10%, Joe?
Only risking 10%.
Oh, it has the units have gone down.
So if you put in 0.2, it will be risking probably too much. That's the problem with the indices, particularly the higher priced ones, when you've got a small account.
Yeah. Yeah, it's not great, is it?
I'll tell you what, Steve, you have a scan through, pick something, we'll give you a little bit more time, and I'm going
Yep.
to talk about the data that's due out today, and then we'll come back to your trade idea, all right?
Yep. Okay.
Okay, so data-wise today, it's another stacked calendar. Starting off with the Bank of England policy decision at 12, then we've got the press conference at 12:30. Then hot off the heels of that, we've got the ECB policy decision, followed by the ECB press conference, and sandwiched in between that, we've also got US jobless claims. So it's going to be pretty hectic, I would say, between midday and around maybe 2 o'clock this afternoon UK time. And then all of that before we've got the non-farm payroll number tomorrow. Now, because we're not streaming on TradingView today, I can show you some other stuff, which is quite interesting. So I'm going to show you an economic calendar here, which is provided by our company, Acuity, which owns Signal Center. And this is a take on all the latest data that's due out today. So we can see this is Thursday. In green, we've got the low impact events. In grey, we've got the medium impact events. And in red, we've got the high impact events. And that's the ones we've just spoken to you about. So we've got these Bank of England minutes later today. And we can look at here the basically what it is, what the actual event is. And then we can look at the UK interest rate decision. And interestingly, or not, it doesn't seem to be working. Let's get this up. So let's go to the Bank of England minutes. Right, this is what I want. I want the history of the Bank of England MPC minutes. We can see here the actuals versus the forecast, generally pretty much in line with what we expect. But where it gets really interesting is the potential ranges that this can create and the level of volatility that we can typically see on these events in certain asset classes. So over the last 10 events, on average, cable, sterling US dollar, has moved by around 45.7 pips in 1 hour after the minutes are released. So we are expecting some pretty significant volatility on this market. And if we take a look at some of the other markets, so euro sterling, for instance, we can see, again, we're getting high levels of volatility, around 24 pips in the hour after this event. So we are expecting some significant moves. If we take a look at the ECB interest rate announcement, obviously we're now talking about euro US dollar because euro is the currency that's going to be primarily affected. We can see here that rates have been rising. We're expecting this 25 basis point rise today, and on average we've seen about 22.7 pips worth of movement in the hour after on euro US dollar. But really where it starts to kick on is on the actual speeches themselves, and they don't appear to be on here, which is quite annoying.
Yeah, I think you need to update that one.
Today.
Yeah.
Have we got? I don't know where it's gone. I swear it was on there earlier, because I was seeing some even more significant movement that we can expect on the press conferences themselves. So yeah, either way, it's going to be lots of volatility. And if we push forward to tomorrow, we look at the US employment report. We'll cover this obviously in the morning. But again, this is another big market moving event. We typically see some large ranges of volatility. And if we go by, a standard event that, typically can fade into being a bit of a non-event, something like Eurozone Services PMI, if we look at that for euro US dollar, then typically we only see around 8 pips worth of movement in in the hour afterwards. So, we really are going to see some volatility today, I would assume, on the back of these numbers. So, Steve, hopefully that given you enough opportunity to come up with your trade idea or to sort it out. Did you manage to get it on?
Yeah, I did actually. I managed to get it on. Selling at
Nikkei was this?
Nikkei, yeah, JP 225 US dollar. Let me just publish this here. Here's the levels. Selling at 27374, targeting a move to 27100 with a stop above the resistance at 27491. So I managed to get it on. And we can pop back to here and see it on the account. Currently 32 pence offside. You're 68p up. Good feel, Steve.
Yeah, very nice. Well
Yeah,
done.
let's hope that we get some sort of like, I mean, like you said, we only need like a couple of decent days, and we're back on track. So yeah,
It tends to
let's
go
hope.
that way. You go through phases where, you know, whatever we pick doesn't work, and then all of a sudden you get a you know, big run of form where we can go on, you know, 10 winning trades in a row. And once that happens, you know, you're back on side comfortably. So yeah, let's just keep plugging away, Steve. We know the strategy. We come up with these trade ideas, and you know, with decent risk reward over time, we do expect them to play out positively. Okay, been a bit of a bumper session today, despite the fact that we didn't stream it live to TradingView, so the viewership will be down. But we really appreciate the guys that did watch today and got involved. We really enjoy helping you guys out and providing some opinions. So more of the same tomorrow to wrap up the week. In the meantime, do be aware of that volatility later today, and be careful out there. And most importantly, have a great day. Thanks for watching, guys.
Cheers, guys.